Hello and welcome to another episode of Fintech Focus TV with me, Toby Bab. And today I'm delighted to be joined all the way from Malaysia by Asad Sultan. Asad, how are you?
Fine, thanks. Thanks, Toby, for having me.
No problem at all. Listen, thanks very much for taking the time to join us. You are the CEO of Deutsche Malayan Ventures. We've been talking a little bit now about what's going on out there, and you know, a lot of the FinTech Focus TV that we've been shooting over the last few weeks is focused on the UK and US markets. Really excited to go east, and wondering if you can give us a little bit of background. I'm going to ask you for two questions in one here, one of which is to give us a little bit about your background. The second one is then to sort of go into a little bit about what's happening and what you're seeing out in the markets out there too.
Well, my own background is I've spent most of my sort of adult life and a good part of my earlier childhood as well in Asia. So I'm very much from this part of the world. I grew up in India, and after having been educated in the US, I returned and worked in investment banking in Asia for some dozen years or so. Interspersed with stints in New York and London and Tokyo. So I did my rounds, in the investment banking world, and on top of that, I've spent another dozen years or so now in business of one sort or the other. Most recently, of course, in technology, which we'll talk about a bit more. But having my first venture was in renewable energy. I also ran a media and entertainment fund in Los Angeles for 5 years. So sort of mixed it up a bit.
Had some fun.
Yeah, well, they don't always work out, I guess. So you have to keep yourself flexible.
It certainly sounds like you managed that. So, look, I'm really interested in where you are now. The Asian fintech market has been very interesting, and look, the world's been affected by this. But I think there's been a sort of robustness about some of the things we've seen out in your part of the world. Tell us a little bit about what's happening.
Yeah, I mean, this is actually one of the more energetic places for the deployment of new technologies, and we've studied this very closely. I mean, I'll go back a little bit and give you some context of our activity within this fintech and the broader 4IR space. When I returned back from LA to Hong Kong in 2017, the Chinese had pivoted from investing in very, I would say visible branded assets like hotels and movie studios into much more brick and mortar technology, IP, engineering assets. And we sort of went with that flow. Most of the money coming out from Asia was looking at investing in this space. And on the other side, most of the liquidity coming into instruments like cryptocurrencies, et cetera, were also being sourced from Asia. That Japan was sort of early out. China had this massive amount of liquidity trying to squeeze itself in the market. And across Asia, there's a high appetite for digital assets and cryptocurrencies in particular, but digital assets as a broader asset class. And some of the platforms that are needed to house those are beginning to emerge from here, which are the fintech platforms, the digital asset exchange platforms, et cetera. So we came to this venture that I'm running in Malaysia was formed around 18 months ago, specifically with a mandate to assist the government with its digital transformation program. My partner is in it. As the name suggests, Deutsche Malayan. We have some European partners. But my European partners are, kind of known as one of the top digital investment houses in Europe. Mountain Partners, headed by Dr. Connie Bursch. He's a super angel from Germany and Switzerland, and has a portfolio of over 300 startups. So the idea that we had was that we could curate not just technology and IP, but also capital around different initiatives that we were able to identify here in Southeast Asia, Malaysia in particular, et cetera. Now, when I say that we were set up to assist in the digital transformation program, the first thing we had to do was actually define that, because most governments are still struggling to articulate what their strategy, their blueprint in the digital transformation is, and certainly 4IR technologies, even things like fintech, which are broad asset classes, they don't have the level of familiarity with it that allows them to make policy and create platforms to support it, and they're also suspicious of it. Ironically, what we found was that the big money center markets like Tokyo, Hong Kong, Singapore, that are already kind of tied to the conventional financial marketplaces are also most reluctant to cannibalize, those market shares. So there are opportunities for countries like Malaysia that we've identified for them to effectively leapfrog by allowing more disruptive type of platforms and technologies to take hold here, by supporting them with more flexible regulatory, kind of schemes and policies. And that's what we were working on designing for the government in a project that we labeled KL Tech City.
Mm-hmm.
So that gives you a little bit of an idea of what we've been up to.
A whistle-stop tour to it, and KL Tech City's been sort of fundamental in some of its thinking, and I think there's one of the things that we're looking at now at this sort of stage, speaking sort of early to mid June now, is not just looking at dealing with the chaos that's come through, but maximising the bounce and sort of looking at the recovery phase of everything that's going on. You've been involved in the 1,000 Startup Initiative, and I think that's a fascinating way of looking at recovery programs and how we can sort of strike back from all of this. I'd love you to sort of explain a little bit more about what's happening with that and the sort of opportunities that you're seeing with it as well.
Sure. So as I was saying, KL Tech City was a broad-based sort of platform that was supposed to support various ecosystems within the 4IR sort of umbrella. And, we thought that Malaysia or even Southeast Asia as a region probably should try and focus on areas where we had some competitive advantages. And, there was some white space and ability to catch up to some of the larger markets like, the US, Japan, China. They've invested so much in areas like AI, for example. It would be a bit naive to think that you could just, throw your hat in the ring and begin competing. So while we were designing that kind of broader, platform, COVID hit. And COVID kind of put a handbrake on us rolling out kind of the end-to-end macro plan, and allowed us to effectively curate, to pick and choose various initiatives that we felt were nicely matched to the current, opportunity or / challenge. Partly it's the challenge that's driving some of the solutions that are coming in the marketplace. Every country, big or small, has had to, throw quite a bit of spaghetti at the wall, so to speak, to support, to support their economies in the COVID downturn. So the initial programs were largely around giving out cash, making exceptions on loan payments and other types of relief on the liquidity for people, for individuals, for businesses, for SMEs, etc. So it was a little bit like, we were kind of throwing fish at them. The second wave that we're kind of going at now is more about teaching them how to fish. So, now we're past especially in Asia, by the way. I know in the UK and in the US, the eye of the storm is still sort of, there. And COVID is still very much a reality for the public and, for the economies there. But I think Asia was first in, and, we're also first out. Generally speaking, I would say, even as an observer here, certainly I live here also, I think that the countries have done a very good job managing the crisis. And, they've implemented policies and programs that have allowed us to, to control it and now beginning to recover from it. So we're in the second phase now, which is the recovery programs. The first stage was sort of, the support. Now we're in the stimulus. Yeah. In the stimulus programs, as I said, using the analogy, now we're going to try and teach them how to fish. So looking at the tools that we were developing in KL Tech City, we selected, a couple of them that were fit for the opportunity to take, not only to help the recovery of the economy, but also to help it transition into a better, more sophisticated, more innovative economy. I think one of the things that, if at all possible, one can try to avoid would be for the economy simply to mean revert back to their 1.0 realities. This is a great opportunity for developing markets, for smaller economies to leapfrog, if you will, by implementing more sophisticated technologies. Now, what does that mean? I mean, bringing more sophisticated technologies means that, you obviously want to support innovation, you want to support new technologies, digitization, e-commerce. One of the realities we've seen around the world is that the bottlenecks in the physical infrastructure that was caused by the shutdown has catalyzed a lot of movement onto the digital infrastructures. So in doing so, there's an opportunity to also roll out next gen technologies to help support that transition. So the 1,000 Startups initiative that you mentioned is something we kind of picked out of our lineup from KL Tech City with a simple agenda that, look, we need to create a lot of jobs, especially for young people, especially in the SME segment, and startups do that. We also need to support the digital economy. So the investment that we make within the startups would be skewed towards innovative companies using digital technology, e-commerce models, and other 4IR sort of suite of technologies to create new business models. We need employment. Startups, hire people, and even though they don't all succeed. In fact, most of them don't. But the fact is that it's supported rather than just giving the money away. Here, you're giving the economy a chance to also create enterprises that can scale and that can create a lot of residual value in the country. And finally, we needed to do this in a very scalable way. Startup investing is kind of a bit of a passion, rather than a process, because it takes as much time looking at a small company and writing $100,000 check or $50,000 check as it does going through the whole process of evaluating growth companies or even listed companies. In many ways, it probably takes more effort looking at startups because they're earlier stage and therefore riskier. So the idea was that we couldn't do this in a analog fashion where we'd invest in 10 or 20 or even 100 startups, because that wouldn't move the needle. So using kind of putting our money where our mouth is sort of thing, and using AI-driven digital platforms, we were able to partner with groups that had an end-to-end automated way of bringing in deal flow, evaluating that deal flow, processing and administrating that deal flow, and putting a lot of capital to work quickly. So the target that we have, ambitious as it is to invest in 100 startups per quarter for the next 10 quarters, with an average ticket size of under $100,000. So that's where you get, the 1,000 Startups initiative. And that should create 20 to 30,000 new jobs. That should, create a number of new enterprises in disruptive new industries and sectors. And ultimately, it might create something that countries like Malaysia are still elusively seeking, which is their own kind of unicorns and decacorns. It's an aspiration that these countries have, and we can accelerate that by basically throwing a lot more at it.
I couldn't love this more. I think it's just such a fascinating way of looking at stimulus, and there's so much that good that I think can come out of all this if we get things right, and to see these sort of investments are just it's something I can get very, very excited about. When we look at it though, there's an interesting piece about recovery and stimulus. I love the whole concept of teaching how to fish and everything that can come back through it. I love the fact that this is about providing rather than just sort of giving out, and creating opportunities. There's a very interesting deck you've put together on all of this, which you're kind enough to send through to me, and there's a lot of interesting statistics around that, and we see you sort of highlight 20, 30,000 jobs off the back of it. There's an interesting piece which you mentioned there, and I'm always fascinated about this, particularly speaking to people in your line of work, shall we say, which is about the winners and losers from it. You say, look, as you said, most startups won't succeed. How do we deal with the legacy of that? What's your take on that? And and how do you ensure that as many of these 1,000 startups are successful and wise investments to mitigate the bad?
Well, first of all, the process that we have is one that is very data driven. So because it's AI driven and it uses and it has the ability to process a very large amount of data, it's it's arguably better because of the ability to process that information in a more sophisticated way. Hatcher, which is a Singapore-based funds company that has developed this entire software platform, is already operational. They've got a portfolio of almost 150 companies that they've invested in using this system, this platform, and this methodology. But in order to invest in 150 companies, they had to look at 10,500 companies, right? So it's very, very selective. I mean, we're investing in the top 1%. In Malaysia, it might be higher since we're going, much more aggressively, and we're looking at a smaller sample size of opportunities. We may be investing in the top 10% of companies, but the idea is we're trying to pick the ones at the top of the, the totem pole, the food chain, if you will. But it is a risky business. I mean, startups are risky, and they're, because they promise greater returns, so they therefore have greater risk. That's just the nature of the game. It's finance 101. But the fact is that through that exercise, if you can, in Malaysia, for example, Grab, which you may be familiar with in the UK, but it's the equivalent of Uber in Southeast Asia. Grab was a Malaysian initiative. It was a startup from here, funded by financial sector players, including the banks and a couple of other investors from Malaysia. And once it hit a critical size, it relocated to Singapore. They were able to access more capital there, and and has become one of the really branded pan-regional success stories here. So I think the opportunity is also in this process for us to find the next superstar, pan-regional branded companies that not only create the economic return that compensates you for all the other companies that don't make it, but also, has so much other ancillary value for the country, for the economy, for the people. And so that's the process. That's why Silicon Valley exists. That's why Silicon Alley exists. And that's why London Tech City was set up, for example, level 39 in the UK. All of that with the same objective to support next generation technologies, disruptive companies, and find the ones that ultimately can scale and become world leaders.
Yeah, I think that investment's been so important, hasn't it, to a number of the sort of hubs around the world that we've seen being super successful. And I think if we look at so many of the criteria, it points towards where you are in KL Tech City and such, like being very well positioned to capitalize on this as well. If we look at where areas of success and focus might be. Look, I love the fact you said there you're going to focus on areas where you can compete, areas where it's sensible to compete and to try and get some trading advantage. Where do you see those opportunities? Where are the gaps in the market that you think Malaysia has a real chance to drive forward with?
Yeah, so we actually did design a blueprint for the country and published it in the form of a book. The co-authors were Dinesh Guarda and our chairman, Rais Hussain. We published that at the Frankfurt Book Fair last year. And, it kind of looks at the entire spectrum of the 4IR technologies and then drills down into which ones developing economies should pick that cater to their own competitive advantages. So in Malaysia, for example, the two areas that we identified as being particularly attractive for us to compete within were fintech clusters, including Islamic fintech as a subcategory. There's a lot of white space there, a lot less competitive sort of threat. So there's the opportunity for us to become world leaders in that space. And in fact, Malaysia already has, especially within the Islamic fintech segment, a number of very promising startups doing peer-to-peer lending, doing other type of payment system services. So that's one area. The second area, as I kind of hinted at before, is sort of going under the radar of what the big money centers are sort of avoiding. Just like in any other industry, so many times that we've seen with other disruptions, the legacy players don't want to give up their dominant position in their incumbent businesses. So they're less flexible, they're less willing to kind of cannibalize their own businesses. And you're seeing that with banks and neobanks. You saw that with mobile services companies and obviously fixed line players. You saw that in Hollywood recently with the digital players like Netflix and Amazon sort of eating the studio's lunch, right?
Mm-hmm.
So I think that we're seeing the same thing here with digital asset exchanges. The big money centers are going to try and kind of like avoid having a huge amount of capital flow off into these other slipstreams of digital property exchanges, digital cryptocurrency exchanges, digital peer-to-peer lending platforms, digital bond markets, etc. But that is coming, and I think that those assets, if you can develop them with institutional robustness. In other words, we're not creating kind of just websites here for people to come in, open up wallets, but to actually create regulated, within the both the financial market regulators as well as the central bank, and institutional quality in terms of the tech stacks that go into building these tools. If we can create actual exchanges that start addressing these digital marketplaces, I think that's a huge opportunity for first movers to take. And Asia is where the capital is flowing from. If you look at crypto, I think 60% of the flow into cryptos is coming from Asia. So there's demand coming from here. Even if we are simply part of the network of global exchanges that are sprouting up in Switzerland and other places, I think that this is something that we should aspire to. And we have a lot of natural advantages. I mean, Malaysia is English speaking, it's a Commonwealth country, English law, it has an excellent technology infrastructure over here. It's basically Singapore, but I think that's the advantage. So we've tried to convey that message to the leadership here. The leadership keeps changing, unfortunately, so we have to keep conveying it time and again. But I think the idea is to get that message across to the key stakeholders here, and to get them to buy into it, because it will 10 years, 20 years from now. I mean, these will be national assets that drive big parts of the economy if they begin that work now.
We saw the rise of Singapore, through basically driving a financial capital through that. Do you see similar sort of things happening with you?
Yes, I mean, I wouldn't want to sound presumptive that KL can become another Singapore, or that Singapore became another Hong Kong, or you don't know. Obviously, the Singapores and Hong Kongs of the world are there because of a reason. They have the intellectual capital, they have the regulatory infrastructure, they have the the environment that gives financial markets confidence and robustness. So the idea is that we just try to emulate them as much as we can and build tools that are of equivalent kind of quality, equivalent robustness, and so it gives institutions and other counterparties the confidence to use these tools.
Fantastic. I'm also really interested in what you were just talking there about the sort of recovery of Asia. Whilst the global pandemic, there's been a sort of sweep of how this has affected the world moving from east to west, I'd say. Tell us a little bit about what's happening on a day-to-day, on a human nature with everything here. Look, you are further into recovery mode, as we say. What's that look like?
Well, I'll tell you one thing that I can tell. One thing that I've come to believe very strongly is that most of the big consulting outfits, and I don't want to name names, but the guys who are out there sort of calling for the next 12 months, 18 months, the next 5 years of gloom and doom, I think they're wrong. I think the human nature is such that there's a very strong tendency towards a normality, even if it's a new normality. And we're beginning to see that in Asia. It's very, very sort of life-affirming. You see that within days of the lockdown measures being relaxed and kind of opened up, you're beginning to see people revert back to work lifestyles, kind of shopping, retail, exercise, social lifestyles that suggest that things will bounce back very, very quickly. I do think, obviously, it makes all the sense in the world to retain the lessons that we've learned from this and keep the protocols in place. Obviously, the one big area is going to be travel. Borders are still closed, and the whole international travel protocol has yet to be detailed. But I think we'll get there very, very quickly. So everyone thinking that, well, we're in this for the long haul, I think we're not. I think that we've seen the sort of the peak of the curve, and we'll quickly revert from there, and that's an encouraging thing. China is a great example. I mean, I haven't been living in China for the last few months while this has been going on, but I've been in Hong Kong for the last dozen or years or more, and I can tell you that the business, even though Hong Kong has struggled, obviously not just with COVID, but also with some social unrest and the protests and things like that. It's back to business as usual, and it's very encouraging. In Malaysia, we're seeing the same thing. In fact, from this week, the movement control order, the lockdown, if you will, has been sort of lifted for all practical purposes. And the country is actually, the leadership of the country is encouraging the people to travel, to do leisure activities, go to hotels and resorts, and you go to the malls and they're full, the restaurants are buzzing. It's a good feeling. I think we'll see the same thing in the UK, and we'll see the same thing in the US. To some extent, we already are. I mean, there are people on the streets in the US, if I'm not mistaken.
All for very different reasons, unfortunately.
That's right.
Moment. But that's I think that's really encouraging. Look, it's very optimistic to to hear that sort of stuff, and obviously it suits the consultancies to spread that sort of doom and gloom message for a little bit, to incur some panic and invest in their services for a little bit. But I think it's really encouraging to hear that the sort of the work-life balances the working practices are returning to norm. I'm conscious that we will be wrapping up very shortly as well, but in terms of what you think some of the sort of real benefits to the fintech community as a whole will be from this, what's going to be the phoenix from the flames? What's going to be the sort of real upside from what you see to this industry?
Well, the speed, right? This is a catalyst. I mean, we've just been given nitrous oxide for a lot of things that were in the pipeline to come into market to now accelerate. We've written, as you know, several articles. I published a couple of pieces with Hirander from GMEX, who you also interviewed.
Absolutely.
And we make a strong case that the smart money is going to return to fintech hubs. Those fintech hubs will interconnect with other fintech hubs around the world and effectively create digital financial systems that will not replace certainly the incumbent sort of financial system that we have, but certainly complement it. And and one day maybe we will see the analogy of the analogous thing that we've seen with mobile replacing fixed line. We'll see that in digital fintech replacing conventional fintech, and I don't think that's a bad thing. Second thing is penetration, speed and penetration. Penetration means that a lot of the unbanked and untouched marketplaces and communities, especially in developing economies, places like Africa, India, also Asia, will now have a much greater penetration through fintech that allows them to reach their customers through mobile, digital, and other platforms. So those will be very noticeable in the coming future.
The future's bright. The future's fintech.
That's right.
That sounds that way.
Where have I heard that before?
Asad, look, it's been an absolute pleasure speaking to you. Thanks so much for taking the time. I know there's going to be a load of people who've got some further questions and want to find out more from you, and I know you've got a lot of information as well that's going to be really valuable for people to read and pore over as well. What's the best way for people to reach out and get in touch with you?
I think LinkedIn is great. It's one of the great connecting tools that we have, especially for people who aren't formally sort of introduced to each other. But my website is deutschmalayan.com, and you can find me on LinkedIn. And please don't send any more WhatsApp messages. That's one thing that we that's one thing we need to curtail. And of
Absolutely.
course, Zoom is great, hasn't it? Zoom has been great.
It's been an absolute savior to in so many ways. I just think if there hadn't been the opportunity for for certain video comms to be able to sort of really thrive through this, it'd be a very different world right now. So very grateful for Zoom watching.
Right.
Asad, listen, thanks so much for sharing everything with it. I'm sure people will be in touch with you afterwards. I'd love to follow this up a little bit later on to see how things have developed as well in the country. And this project, I'd love to follow it up and see how far you're getting with it in a quarter's time, and sort of have you back on the show. It's been absolutely brilliant talking to you. Thanks so much for sharing your story, and thank you all for watching. Thank you very much. We'll see you all soon on another episode of FinTech Focus TV. Thanks so much.